Like any other market, the cryptocurrency market has its highs and lows. Those familiar with investment terminology will recognize these peaks and downturns as the bull market and bear market, respectively. While the market may be unpredictable at any time of year, it can be more challenging to make sound judgments at these times. While all of these stages are common, a bear market represents the shorter end of the financial stick. Making the right decisions becomes much more challenging if you are a crypto investor. Stick till the end of the video to learn about 5 important things you should know about crypto bear markets in terms of investments. Let's first start by explaining what a bear market really is. In simple terms, when the price of a market continues to fall significantly over a prolonged period, this is known as a bear market. It is a period in which the value of shares decline by at least 20% from recent highs due to widespread pessimism and negative market sentiment. This type of period is known as a bear market. Bear markets are typically accompanied by significant drops in the value of a bigger market or index. Because Bitcoin and Ethereum are the front runners in the cryptocurrency field and other cryptocurrencies follow in their footsteps, the whole market looks to those cryptocurrencies to determine the direction the markets will go. Bear markets are characterized by a decrease in prices of at least 20% over an extended period, typically 2 months or more. A bear market can also exist when cryptocurrencies or commodities experience this decline. Bear markets can also occur with more substantial economic downturns such as recessions and can be contrasted with bull markets, which happen when the markets are headed upwards. Bear markets can also be associated with significant economic downturns such as recessions. A typical bear market consists of 4 different phases. Let's discuss them one by one. The initial period is characterized by its high pricing. After this time, investors start selling their holdings and taking their profits. The second phase is characterized by a fall in asset prices and trade activity, a decrease in firm profitability, and a deterioration in the earlier hopeful economic indices. Some investors may sense anxiety, which is a condition known as capitulation. This fear occurs when the mood begins to deteriorate. That is a moment of worry for investors, so moving to the next phase. The speculators enter the market, and the market enters the third phase, characterized by an increase in both transaction volume and price. Now move on to the final phase. In the fourth and final phase, the price of crypto continues to fall, albeit at a slower rate. Bear markets eventually give way to bull markets due to a combination of factors including falling prices and generally positive news. With all that being said, here are 5 crypto investment tips you should know about bear markets. Keep in mind that this video has been created for educational purposes only, therefore no financial advice is included. Number 1. Dollar cost averaging. In terms of investing in a bear market, dollar cost averaging is one of the investing methods shown to be one of the most profitable during bear markets. This means that you will divide your reserve cash into smaller amounts to engage in future transactions with them. For example, you have a total of $2,000 in savings. It would be helpful if you could divide this reserve money into 10 equal increments of $200, or 5 equal increments of $400. You can engage in trade utilizing these more manageable sums while preserving your safety. It is difficult to estimate when the price of a digital asset will drop to its lowest before beginning to rise again. Therefore, if you want to keep some of your money in your pocket, you shouldn't spend it all at once. It is advisable to begin with a modest investment and test the asset's functionality. If you are successful, you should try to increase your winnings and then continue. Number 2, you've probably heard the famous saying, don't put all your eggs in one basket. In terms of investments, the situation is the same. Investors with significant previous expertise may or may not consider short selling as an investing strategy. When you engage in short selling, you sell an asset at a higher price to repurchase it at a lower price later. When the value of the assets sold in the short term decreases, crypto traders can make significant gains in the long run by selling their assets. Even for those just starting in crypto trading, it is much simpler to rebuy cryptocurrencies. Much like traders in any other market, cryptocurrency traders are often looking to purchase an asset at a cheap cost in the hopes of later selling it at a greater price. On the other hand, the situation is exactly the reverse when utilizing short selling strategies for cryptocurrencies. Through short selling, you may or may not generate profits even while the market is experiencing a drop. In practice, this means you'll be required to borrow a certain cryptocurrency at the price it is trading at and then sell it as soon as possible. You have now attained significant value. When the prices go down, you buy the currency all over again at the new, lower market rates that have just come into effect. Return the money that you borrowed to your broker. Because of this, you are now able to make a profit equal to the difference between the previous market value, your selling price, and the current market value, your buying price. Number 3. Invest your time in research. When considering how to invest during a bear market, falling prices are typically the first thing that comes to mind. Consideration of the unpredictability of negative trends is a character flaw that is widespread among investors. It would help if you use this time to do some research and spend some of the important time you have researching cryptocurrency in general or about a specific coin. You are free to start with a crypto section if that is what you want, or maybe you can seek more investing skills to manage your digital assets in the future without taking any unnecessary risks. Are you still unable to make up your mind on what to do in a bear market? Before you get into the crypto bear market, you should consider conducting extensive research on how to make money in a bear market. You might also educate yourself on crypto investing to generate passive income. Even if the prices continue to fall, you can be hopeful that your crypto assets will generate more than 5% yearly returns. When you hold a portion of your cryptocurrency in reserve, it helps to maintain the security of the network and ensures that you receive consistent returns. When trading cryptocurrency, the only way to achieve success is through logical and extensive research. Keep in mind that websites that are driven by self-interest or are obscure will serve to deceive you, resulting in your dissatisfaction. Therefore, you should do your research appropriately in advance. To be a successful investor, you must stay on top of the changes and trends in the cryptocurrency market. You should also have significant knowledge to meet all problems in cryptocurrency trading. Always rely on the sources that can be trusted and keep a close eye on the market. It is the most effective strategy for protecting the value of your cryptocurrency assets. Number 4. Don't be anxious about selling. Keeping your emotions under control during the peak of a bear market is not easy. When it comes to getting ahead professionally in trading, the experts claim that this is the thing that presents the most significant challenge. It is hard for individuals to profit from their investments if they cannot maintain control over their feelings and thoughts. When confronted with a significant price drop, your natural desire as a human being is to cut your losses as much as possible. But in the long run, acting in this manner will not result in any profitable outcomes. You need to take a step back, relax, and think about the reasons you invested in cryptocurrency in the first place. You are undoubtedly excited about the prospect of bettering your life by working more and putting away a more significant percentage of what you earn. Clear vision of the future combined with careful planning may significantly impact financial outcomes. Mastering the art of making a profit is another difficult job. You run the risk of having greed influence you, which can lead to increased levels of expectations. It raises the risk associated with your trades, mainly when you don't use stop losses. Analyze the factors that led to the price reduction, investigate these factors further, and come up with your answer. Ask yourself if the conclusions you obtained in the past now apply to the requirements of the current market strategy for a huge game. Number 5. Diversify your investments across various crypto assets. There are currently over 17,000 different cryptocurrencies available for purchase. Nobody can make an accurate prediction on which of the cryptocurrencies will recover quickly and which will have the greatest rank. It is also difficult to predict how long the bear market for cryptocurrencies will last. You may utilize DCA for a wide range of various cryptocurrencies and crypto assets. You may need to lower the number of your trades, which will also lessen the absolute risk for your business. It is not suggested that you choose and invest in a particular cryptocurrency. You will devote sufficient time to determining which option will serve you best. Observe the evolution of the asset's price over time. You may use several kinds of software, such as TradingView, to determine how effectively it recovered from challenging times. Is it comparable to other cryptocurrencies on the market, or does it operate independently to outperform other currencies and other assets? Even though the coin's success in the past is not a guarantee for a prosperous future, you can still get a good notion of how the market is now performing. In conclusion, cryptocurrencies, like other assets, go through periods in which their value increases and decreases. If you're an investor with a short-term horizon in particular, being aware of the warning signals of a bear market can assist you in developing a portfolio plan that makes sense in light of your risk tolerance and the objectives you wish to achieve financially. But the key is to keep calm during bear markets and not to take those steps that will harm you in the long run. I hope this video has provided you with valuable information. Thank you for watching.